Hello, everybody. And well, last week was quite the week, wasn't it? So, what caused this? All right, now we're going to go into the plumbing of the international banking and currency systems. And I'm going to try to make you familiar with a term in our world. It's called the yen carry trade. And what happened to cause the stock market to fall 1,000 points, just like that on Monday morning? The problem started on the other side of the globe. It starts over here in Japan. So, what is this thing? All right. The Japanese have been trying to stimulate their economy for over a decade. They haven't hiked interest rates in 17 years. Meanwhile, their interest rates have been zero or negative. I mean, imagine negative rates. I mean, you go get a mortgage and the bank pays you for the mortgage. That's what a negative rate does. This has been so upside down in Japan for so long. You've heard us joke, Japan's a bug in search of a windshield. Well, why were they doing this? They were trying to keep those rates super low to try to stimulate their economy to be competitive against the Chinese, so on and so forth. Well, there are always consequences. So let's imagine you're Trader Theodore for Goldman Sachs in New York, and you're looking across the water and going, wait a minute, I can borrow from the Japanese at 0%? That's free money. And I'm Goldman Sachs. I'm going to put $100 million into this. So you go overseas, you grab 100 million in yen, you bring 100 million to the United States, and then through the magic of Wall Street, you can turn that into 500 million and invest it in US Treasury bills or bonds or notes at 5%. Okay, so I'm borrowing at zero. I get to lever it up 5, 6, 10 times and invest at 5. This was the easiest money making machine in the world. So he does it. And then Jim over at JP Morgan is doing it. Mary at Merrill Lynch is doing it. Hans at Deutsche Bank in Europe is doing it. Pretty soon the whole world is participating in this yen carry trade. Everybody's carrying yen to their banks or businesses and investing in something else and making the difference. Well, it wasn't a real hard way to make money, and pretty soon the whole world was in on it. We had the yen carry trade reached $20 trillion, stunning in its scope. Well, okay, what lost here? If all these guys are winning, the Japanese yen itself, the currency kept falling. And the other issue was the banks in Japan. How do you make money when you're loaning at near zero? Nevertheless, they kept this policy up until last month. And the Bank of Japan finally said, we got to do something about this. This is getting out of hand. Our currency is in a nosedive. Our banks are in trouble. And so what did they do? For the first time in 17 years, they hiked interest rates. Well, this freaked the rest of the world out because suddenly this wasn't working. It didn't take much of an interest rate hike to turn some of these trades, because they were so levered, upside down. Besides that, remember, you got to pay this stuff back in yen. Now suddenly the yen wasn't weakening, the yen was exploding higher, exploding up 10%. Now in currency land, that's a lot. And suddenly 22 trillion in trades starts to go upside down. I got to get out. Sell, sell, sell. This is what we saw. All right, so we have panic. Well, what happened with the Bank of Japan? They now had a decision to make. Do we save the yen or do we save the system? I can't imagine the pressure. The Federal Reserve was calling them probably. The European Central Bank traders were, what are you doing? You're going to destroy the whole thing. And the Bank of Japan buckled. They gave up. Said, all right, we're not going to do it anymore. Immediately, the thing reverses. The stock market does better. Meanwhile, the yen now hit, a 34-year low on Friday. We were like, Walt and I are in the office going, okay, what does this tell us? What this tells us, and it should tell you, is how fragile this system is. That this thing is so distorted by so many years of central bank interventions, not just here in the US, but in Europe and in Japan, that 1/4 of a point move in interest rates almost sent the whole system down. So what do you do about it? We've anticipated this. We have been talking about this for a long time. What do you do when you're going to have the year of chaos? And you may not remember this, but back in January, Walt and I said, if we had to put a label on the year ahead, it will be called the year of chaos. Well, so far, so good. And I don't expect it's going to get any better before the election, or maybe even a little bit after the election. So what does well in that environment? On Monday, when the stock market fell 1,000 points, energy was up, food was up, gold was down, but it was down half as much as the overall markets. The markets were telling you something. Big money was moving to what they considered stable. We're already there. So should you buckle up and grip? Because this could be a crazy time for the next month or two. Yes. But do we believe you're in the right investments? Yes. And the end carry trade just reinforced our view that you're in the right stuff. So with that, I'll turn it over to Walt.